Welcome. This is Bert Dohmen's Chart Guru of February 25th, Monday. Today was an exciting day in the markets. The Dow Jones Industrials lost 216 points at the close, and the decline during the day actually accelerated into the close, and all the major indices closed at their lows. We've been warning about this for the past several weeks because we have been noticing the big distribution patterns in the stock market. Distribution means when the big money, the big smart money, meaning the Wall Street firms and their proprietary trading, and the big hedge funds sell, and they keep the S&P 500 and other major indices up in order to present the illusion of strength so that they can sell their other stuff at good prices. Here we have the chart of the S&P 500. This is a candlestick chart with the red and blue bars. That's the S&P 500, and you can see that here in January and February it went to a new high above the high of last year. Okay, now we have to see, this sets up a potentially false breakout. If the index now goes below this horizontal line, that would be first good evidence that we had a false upside breakout, and false upside breakouts usually lead to very sharp and meaningful declines in the market. We don't know if it's going to happen yet, but that is something that we will be watching for in our trading services like Smart Trader or the ETF Trader. We can see here that while the S&P 500 was being manipulated upward, that is the trend line here, trend line A, the majority of stocks actually were already declining, and this is the trend line B. It marks the decline on the black line, and the black line is something that may sound complicated, but let me explain it. It's really not that complicated at all. It's a percentage of all the stocks in the universe that are one standard deviation above their 40-day moving average. Okay, so when this line declines, it means that fewer and fewer stocks are above their 40-day moving average, and it means that they're declining. And we saw this in the middle of last year. It gave a very good signal because it started declining sharply, while the S&P 500 index was still being maintained here at a level and keeping people bullish. But as we saw then came the painful decline going into November 16th. And on November 16th, we said, okay, close out short positions. We're going to have a good rally right here. And that was the exact low. So once again, we caught the exact turning point to the day. Now, we've been going up here. This actually has gone longer than anybody would have expected, and also has gone somewhat longer than we expected. And usually our rule is, and that's 35 years of experience in the markets, that if a rise goes longer, then any fundamentals and technicals would suggest that the ensuing decline will be that much sharper. Here we have a special stochastic at the bottom, and you can see the cursor here and the arrow, which gave us the crossover on this. The crossover means that it's a sell signal, and as you can see here, it came at a beautiful time just before this big decline in the market. So if you were long, you would have sold. If you're a short seller, you would have sold short, and you would have made some very nice profits. Here on November, no, this was right after November 16th. You know, crossovers usually come a few days late. We would have had a bicycle. So that bicycle has now been canceled, and we are now, since the first time since November, we have a sell signal by these two lines crossing over. A sell signal at this level should not be ignored. This could be an important correction in the markets, or maybe even more. We just don't know that at this time. So in our Smart Trader service, we have been talking about what's likely to happen and also the fundamentals behind this. You will hear now everybody talking about the Italian election is what caused this decline. Well, that's totally ridiculous to think that money managers in the U.S. will care about the Italian election. It has absolutely no meaning for the stock market. It's just a smokescreen to cover up that this market is now destined to go down, because it is meant to go down. Okay? Nothing happens by chance in the markets. Okay, this is Bert Dohmen signing off.